What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we're talking about how you can enter into a position that you are trading into, whether it's a stock, an ETF, or whatever it is you're trading. We're going to break it down today and show you what my logic is and what I've learned throughout trading so far. So if you're excited for today's video, feel free to like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. Let's get that percent of people who are watching and not subscribed down below 80%. If you're clicking on this and you're watching it, just click the subscribe button. It's free of charge, of course, and that would help me understand kind of what people are enjoying for content. So let's get into it here. Again, this was a request that came to me from after hours on the platform, and someone said, can you go over the ideas of looking at how to enter into a position? And the best way to explain it is by looking at some different examples here. And the more and more you create charts, the more and more you look at different levels of support, levels of resistance, really does help to allow you on your starting point and where to go from there. Oh, it looks like this level kind of moved a little bit. Let me move this blank back up here. So what you're going to look at is the first one I'm showing you is ticker symbol BTOG, also known as Bit Origin. It is a penny stock at the end of the day, but I will tell you, for whatever reason, this stock has been following my fib levels very, very nicely. And we can show you, again, how this idea works. So basically, I look for a stock that has had a swing high and then has had some kind of retracement or some kind of pullback in the market before rallying it again. And again, so you can do the fib retracement level here. You click it, you go from the highest point down to the lowest point, as you'll see here, and it creates these Fibonacci levels. Now, the Fibonacci sequence is a very important thing that you see all the time in math. It's everywhere, believe it or not. And so the levels you're looking for that we can take a look at and click into, let me click into it here for you guys here, is the key levels to take a look at are usually for me the 50% retracement and the 61.8% retracement. This is the golden ratio number right here, believe it or not. You can look into it if you need to. But these are basically my levels I'm looking at for the major usual retracements when it comes to. And so Bit Origin has been following these levels pretty nicely. And you're saying, well, Fridge, kind of in the 4 hour. But if we dive into the 1 hour, for example, taking a look at this, it breaks through this level of resistance, comes back down, retests it, and then comes back down again. And you can see how it's retesting this 47-cent line right here. So the more and more you look at charting it, the more and more you can get a good visual as to where the stocks is trading and what are some key levels of support and resistance. Now, what you'll see if we go even further, let's go to the 30-minute time frame, right? The 30-minute time frame shows you again something break through into that golden ratio zone here, or into that golden zone here of the 50% retracement, and then again it retests and it comes back down. And as you go back even further, you take a look at these lines here. Look at this nice little resistance level here. You can see from before it almost retested here again. You can keep on looking and looking and looking. We can go into the 15-minute and look at more and more of these data points here. And the more and more you see these levels kind of start to be hit more and more, the easier it is to spot when you might get a potential reversal. So for example here, if you go to say the 5-minute, I don't know why I didn't take this trade earlier, but I should have. But with Webull, you can trade with shares, not options. But with shares, you could trade for pre-market, right? So here we have a rejection of BTOG at this 57-cent level right here, pretty much spot on, right? So again, you can take a look at the market open from yesterday, broke through, retested it, then it broke through again, still showing that level of resistance. It retested it pre-market, didn't do it. Retested again, fell back down. But what I could have done here is I could have seen this retest of this little support level right here on the 47-cent mark. Now, with your levels of support and resistance, it's not just the line is the end-all be-all. Usually people will make a nice little rectangular box because it's like a region, basically like a margin of error. Like, hey, if it hits this region here, there is a good chance of getting a kind of, reversal in either direction. If you were to take the reversal on the 5-minute chart here, for example, if you see this rejection, but the candle didn't close below it here, that means that this is a pretty good reversal. And if you were to take a trade, say, wherever it closed at, which was like right here, and then you bought shares in the pre-market after this failed breakthrough of the support zone, you could have bought in here at the close of this candle, and you could have rode it up about 8.5% in a matter of like 15 minutes. It looks like maybe like 20, 30 minutes. And that's it. So a good way to look at entry levels is to look at your support levels and your resistance levels and chart it out. If it doesn't look good, you can always delete it and you can always rechart it back in, right? So one example of an entry strategy, wait to see what happens. Up, it didn't break through here. The candle didn't close below the line. The wick went below it, but it matters where the candle closes. If the candle closes right here, it still didn't break through that support. And then you can look back up here again, you're looking at about an 8.5% return to the upside. Could have closed out your shares. You could have bought shares and then closed shares because you can't do options with BTOG. They don't exist on the options chain. It's a penny stock also. But this is an example of what you could possibly do. If you were to short BTOG, you could have shorted it right here at this rejection level. Anywhere over here, you could have probably shorted it, and you could have ridden it all the way down to the downside, about 17%. So these levels of support and resistance can really indicate some key levels of entering and exiting positions. Now, imagine if BTOG comes up to here again. If it doesn't break through here, I would exit and close my position if I bought shares. If I wanted to short it and I saw a rejection here, I would short it back down to the 47-cent mark, for example. So there's plenty of different ways you can ride these options and these momentum plays. Again, you can see the same thing here. It is not breaking through the support in this little pre-market, and look at the rally you would have gotten into the market open here. You could have said, okay, well, Fridge, I noticed that it hasn't broken through here. You could have ridden it up 34% in a matter of less than a day in trading this stock. Unbelievable returns here. But again, penny stock. Fridge, is this one example only? No, I got another one. For example, Grab Holdings, which I currently do have a long position in right now. I have a synthetic long where I bought a call option, I sold the put option. It kind of goes back to my leap option video from a couple days ago. So here's proof there is a position on my Robinhood that has this there. And take a look at what we're looking at here. You can see that this right here is rejecting this important line of 5.215. It's rejected it now multiple times. You can look even further back here. I think did it over here earlier as well. Well, it just broke through there, it looks like. Maybe not as much over here. It's gotten kind of close, but not quite. But this is my fib levels I'm looking at. Now, what you'll see is you'll see a lot of solid support here at the 15-minute. This might be a little bit easier to look at. Look at the support we have around this 4.81 line here. So we're looking at a 4.81, 4.82 line here. And if it doesn't break it, you can ride it to the upside. And it hasn't broken the 5.23 yet. So chances are, basing off of these entry and exit points, you're looking at a potential swing to the downside. Now, if it breaks 5.23 or 5.21, and it does create it as a support line instead of a resistance, so it retests it and it doesn't break through again, you could ride it up to the next fib level of 5.72. So again, the fib levels can create some really good levels of entering and exiting positions. And again, the more you zoom out, the more you can kind of see the pattern as to what you might be looking at for a position. Look at this retest at the 572 level. This is your next level of resistance. Here you can kind of see it coming to that support level, but then it broke through, and now we're kind of climbing back up, hopefully. And this is a very strong support line, looks like, at 4.82. Because again, you keep looking at the data points, it was resistance, now it has become a level of support. So if Grab Holdings, say you set a notification to buy in at 4.82, hits 5.82, you buy in anywhere close to it, and you can ride it up to the upside, just like you could have done right here. And again, from this support level, just to see the data behind it, you could get in at, the bottom here, and you could have ridden it up, to, if you bought shares, 8% return in a matter of like 2 days. So you could have held these shares for 2 days, closed it out at 5.2, made it some decent profit in a couple of days. The other way you can look at an entry, which an entry is what I did today with SPY here, and you can kind of see where we're looking at. So with the SPY ETF, a lot of people like to trade what's called the ORB strategy. Now, the ORB strategy is called opening range breakout. And the most common way of doing it is to determine the support and the resistance of the first 50-minute candle of market open. Here we have the 50-minute candle high. Here we have the 50-minute candle low. And then what you're looking for is a breakout to either direction, to the upside or to the downside. If it breaks out to the upside, you can take calls. If it breaks out to the downside, you can take puts. right? So that's kind of what the idea is behind it. Now, for me, with this strategy here, I also leveled out the pre-market high and the pre-market low because of pre-market data of PPI coming out today, and it didn't come in too hot. It came in awful for us. So a lot of volatility kind of happened here. A little bit of volume happened pre-market. So I also marked out the pre-market highs and the pre-market lows, just kind of get myself an extra level of support and resistance. So what people do is they'll wait to see when we get a break of the 15-minute opening range to either direction, and you can write it out. And again, as you would have seen here, you could have written out to make some really good profits here, okay? And I'll show you how I opened up my trade today and then how I closed it and what I was looking for. I like to look at the 5-minute candle to kind of get in and out of these trades pretty quickly. So what you'll notice here is say, okay, well, Fridge, look, I got a breakout here of this candle, so I should go long right now. And what I've added in is the 9 EMA and the 20 EMA, which is the exponential moving average of SPY for the last 9 days and for the last 20 days. Entering here, for me, I didn't like because the 20 EMA was still above the 9 EMA, which means that there was not a lot of short-term movements happening because the 9 EMA was below the 20. Once this cross happened, which you can see, there's a nice little cross of the EMAs here at 10 in the morning, as you see the timestamp down there. That's when I was like, okay, it retested this level, became support. I said, okay, we have the stars aligning here. We got a breakout of the 15-minute. We got a cross of the 9 and the 20, and we got a retest that didn't break the 15-minute orb level. So from here, I bought in with calls, and I wrote it up, and I think I closed it out a little bit later on here. It got a little tricky for a little while, but I was able to write it up, and I already closed it. I could have made more money, but also I could have lost, because again, look at this big candle right here. That could have been a big candle that could have taken away all my profits. And so what we'll show you is if we go into the margin account here, let me open it up for you guys. Here we go. Open it up at 10 in the morning on the dot. Closed it out at 10:20, so I made about $30 or so, which is a pretty good return for the day. So maybe about $30. I did the orb on Monday and I lost about 58, so I am still down for this week right here. But overall, I was happy to gain back some of those returns here on the day, and that was in a matter of in and out in about 20 minutes or so, which was absolutely awesome. So another way you could look at entering and exiting positions, you could do the orb strategy, where you could look at a breakout to either the upside or the downside of the 15-minute candle, and then use that to kind of make your bias along with it. And again, I could have made a lot more money here, as we know. I sold it for like what, it was like 511, and I think it was a 641. So I went, and it was I think it was the 4-day one. Let me see what it would have been at. Yeah, so it'd be up an extra like $20 or so, but that's all right, no big deal. Again, I'd rather take profits than to lose money, right? Because what could have happened here, as you can see, it retested that 9 EMA multiple times. I think if it broke this, it could have been a nice reversal, and that would have been a problem for me personally. So that's kind of what we did, and we wrote it out here. Now, what you really could do, and what I probably should have done, is I could have just gone until it retested the pre-market high and then just close it out there. But obviously, we all reflect on things in the hindsight of things. So these are just some examples of where you can look at entering positions. Again, SPY could be the opening range breakout 15-minute. Bit Origin follows this nice little, Fibonacci retracement levels. And look at that, it's up again. So you could have even gotten even higher. So say you would have gone in like here. You're now looking at about 12.5% move to the upside, just like that, in a matter of like an hour, maybe, give or take, right? You just ending with grab holdings. Grab holdings could have gotten the rejection right here and pulled it down. So again, your levels of support and resistance, when you see these kind of patterns, the more you give yourself a better entry. And if you set a stop loss, you get stopped out. It's the conviction. If your conviction is there that I think it's going to do this, even if it gets stopped out, it's not the end of the world, okay? Go with your gut, go with your convictions, go with what works for you, and it's going to make your trading a lot more beneficial. So that is basically some ways to look at how to entering positions. Thank you guys so much for watching today's video. If you made it this far in the video, as always, feel free to like the video, subscribe to the channel, turn on the notifications for all future uploads. As always, I hope you're making money in the market, and I will see you guys in the next video.